Welcome back to Investing Talk Podcast.
Today we're looking at Reddit. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay, so let's unpack this. Reddit is, well, it's kind of a classic post-IPO story, isn't it? You know, marked by extreme excitement, then these massive swings.
Absolutely. And right now, the market seems to be betting heavily on them making that transition.
Transitioning from like a cultural phenomenon.
Yeah, exactly. To a more predictable, profitable business.
Yeah.
And the next big test is right around the corner.
Right, October 30th, the Q3 2025 earnings.
All eyes are on that date. And I think it's less about just, checking boxes and more about confirming that this financial turnaround we've started to see isn't just, well, a fluke.
So what are investors really zeroing in on?
Two main things, I'd say. First, sustained user engagement. Is it holding up? And second, the commentary around how resilient the digital ad sector is proving to be, especially for, these niche platforms like Reddit.
Yeah, and what's really fascinating here, I think, is just the sheer speed of their fundamental shift.
It's pretty dramatic.
For years, the whole narrative around Reddit was great platform, huge user base, but...
Can't make money. Yeah, we all heard that.
Exactly. But that seems to have changed quite dramatically.
It really has. I mean, if you look at the trailing 12 months, TTM Reddit reported net income, actual profit.
How much are we talking?
Around $216 million, which is just a colossal turnaround from the loss they reported last year.
Like a huge, right?
Yeah, a $484 million loss in 2024. So this rapid swing, it suggests more than just like basic cost cutting.
You mean it points to improving operating leverage?
Exactly, meaning, every new dollar of revenue seems to be dropping more efficiently to the bottom line than it used to.
Yeah, okay, but I have to push back a bit there. Is that sustainable? Or is it more of a, one-time adjustment?
That's the key question.
Because while the bottom line looks great now, the revenue growth engine also needs to keep firing.
Yeah, and that's really the core of the bullish argument. Their TTM revenue is sitting at $1.67 billion.
Which is up significantly year over year.
Yeah, a 28% increase. And you have to put that in context. In the current digital media space, which is pretty saturated, that kind of rapid top-line growth really outpaces many of their bigger, more established peers. They're definitely building scale quickly.
And we have seen some positive signs recently that seem to back this up.
Like the August earnings.
Exactly. They beat expectations, didn't they?
Yeah.
Especially on user growth, which suggests maybe their platform tweaks are working.
Right. And then there was that news in September, adding a high-profile tech veteran to the board.
Yeah, that fueled a lot of speculation, didn't it?
Yeah.
About maybe a renewed focus on product innovation.
And specifically how they might leverage AI.
Which I think leads us nicely into the core investment thesis, right? The moat.
The moat. Why is Reddit different? Why should investors care?
It's not just that they have communities, is it? It's the kind of data these communities generate.
Precisely. While competitors might offer, general social feeds, Reddit offers something else, these decentralized digital cultures.
Focused on niche, high-intent conversations.
Exactly. I mean, just think about the data coming out of a subreddit dedicated to, say, high-end watches.
Or specialized software, maybe.
Right. You've got highly motivated consumers openly discussing maybe $10,000 items. That level of specificity is gold dust for advertisers.
And it's really hard for the giants like Meta or TikTok to replicate that, isn't it? Because their platforms are built differently.
They're built for broad, maybe shallower engagement. Reddit's value lies in that depth.
So how are they turning that deep engagement into actual revenue? That's the key.
Well, they're making moves. They've announced an expansion of their advertising API.
Which should mean?
New, potentially high-margin revenue streams, better data partnerships. It's about making that community influence pay efficiently.
And didn't we see some strategic moves back in September, too? With advertisers.
Yes, they announced new partnerships with some high-level advertisers, specifically aimed at boosting their ad revenue market share, materially boosting it.
So not just relying on the old display ads.
No, they seem to be diversifying, launching new ad formats, looking at e-commerce integrations, moving beyond just traditional display.
Okay, so if we connect that growth potential back to the financials.
Yeah.
The balance sheet looks pretty solid.
Very solid. Market cap around, almost $40 billion?
Yeah, close to $39.86 billion. And the crucial part...
No reported debt.
Zero reported debt in this kind of high-growth tech environment. Now, that suggests resilience, definitely.
A huge cushion.
But playing devil's advocate,
Mm-hmm.
from an investor standpoint, couldn't you argue that's maybe poor capital allocation right now?
How so?
Well, couldn't they be leveraging potentially cheap financing to accelerate things even faster, like AI development or a massive international push?
It's certainly a more conservative approach, you could say, but maybe it gives them maximum optionality.
Flexibility, you mean?
Yeah, they have the flexibility to make big moves, maybe an acquisition, maybe that aggressive international push you mentioned, perhaps into Asia or Latin America.
Without needing to go cap in hand to the market.
Exactly. It suggests they might be funding growth primarily from operational cash flow, and that sends a powerful signal.
Okay, that paints a pretty clear picture on the fundamentals. Let's switch gears a bit. What about the technicals? The chart.
Right, because enthusiasm needs to be grounded in price reality.
Where's it trading now? Around the $212 to $222 mark.
Yeah, in that range. And that range itself tells a story, doesn't it? Intense volatility.
Just look at the 52-week range. It's wild.
It really is. From about $79 all the way up near $283. You absolutely need the stomach for those kinds of swings if you're holding this one.
Definitely not for the faint of heart.
Not at all. But despite that volatility, the intermediate term picture, it actually looks structurally quite strong. Well, even with the pullback we've seen from the 2025 highs, the stock is still holding well above its 200-day simple moving average.
Which is around $165, right?
Roughly, yeah. And that typically signals that, the bigger institutional money is still confirming a longer-term uptrend.
And momentum indicators, are they screaming overbought?
Actually, no. They're fairly neutral. The RSI, the Relative Strength Index, is in the mid-50s.
So plenty of room for potential upside, technically speaking.
It suggests so. Now, volatility is high, no question, about 10.32%. Significantly higher than, say, a Meta or an Alphabet.
But that's kind of expected, isn't it? For a high-growth name still finding its feet post-IPO.
Exactly. It comes with the territory.
Okay, what about the analysts? What's the Wall Street consensus look like?
It's pretty strongly bullish, actually. You've got maybe 25 to 28 analysts covering it, and the consensus is generally a solid buy.
And price targets, where are they clustered?
The average 12-month targets are mostly around the current trading range, $212 to $218, give or take.
But there are those more optimistic long-term views, too.
Oh, yeah. That's where it gets really interesting. You see these super bullish long-term forecasts, some projecting values potentially up to $468 by 2030.
Wow. But that's not based on current ad metrics, surely.
No, not at all. That kind of forecast hinges entirely on their ability to really scale up the data monetization side.
And the AI offerings, globally.
Exactly. It's a big bet on future execution.
So for an active investor, someone watching closely, the next 3 months look pretty packed.
Absolutely packed. This isn't a stock you can just buy and forget about right now. Too much happening.
Beyond the Q3 earnings on October 30th, what else is on the calendar?
Well, November 15th could be important. Potential ETF rebalancing.
Why does that matter so much?
Because if a major index ETF decides to add Reddit or significantly change its weighting,
it forces large institutional funds to buy or sell shares, regardless of their own opinion.
Right. Which can drive significant, sometimes rapid, share price movement and bring in more institutional attention.
Okay, what's next?
Yeah.
December
2nd. That's often when they release their holiday user report.
Focusing on operational stuff, like traffic.
Yeah, traffic, user behavior during that critical holiday retail quarter, it's a key operational metric.
And then later in December?
December 18th, that's flagged as an institutional buy window. Some early lockup agreements might expire around then.
So analysts will be watching for what, an influx of institutional money?
Yeah, watching to see how the shareholder base stabilizes. More institutional ownership can sometimes help reduce that overall volatility over time.
Okay. So we've laid out a very strong bullish case here. Profitability turnaround, high growth, strong technicals.
Lots of near-term catalysts.
Right. But let's be balanced. We have to talk about the risks. What could seriously derail this?
Risk number one, I'd say, is the sustainability of that profitability.
Back to that point.
Yeah. I mean, they reported a profitable TTM, which is great, but is it consistently scalable? Especially if the broader ad market tightens up globally, that's still unproven.
And then there's the elephant in the room. Competition.
Always. It's intense. And you can't just say competition. You have to think about how giants like Meta, Alphabet, TikTok specifically attack Reddit's model.
They copy features.
They copy community structures, they siphon off attention share, they throw massive R&D resources at problems. Reddit really has to execute flawlessly on pretty much every new product launch just to keep pace, just to stay relevant against those heavyweights.
It's relentless pressure. Okay, risk number 2.
Regulatory scrutiny. Has to be.
Because of the nature of the platform. Open forums.
Exactly. Because Reddit hosts discussions on, well, almost anything. They are constantly navigating this minefield of content moderation, data privacy practices.
Any misstep there
could lead to big compliance costs, potentially huge fines, or serious reputation damage, and that forces them to spend capital that could otherwise be going towards growth initiatives.
Okay, risks noted. Now, you mentioned the fun stuff earlier.
Ah, yes. The speculative buzz.
The rumors and chatter that could swing the stock, sometimes wildly, regardless of the fundamentals or the quarterly results.
You can't ignore it with a name like this, so what's out there?
Well, there's persistent market talk about some kind of potential data collaboration, or maybe even a deep integration with a larger social network.
Using Reddit's unique conversational data, perhaps, to refine ad targeting somewhere else.
That seems to be the idea behind that particular rumor.
And building on that data theme, there's high speculation about imminent announcements, specifically around advanced AI-powered contextual advertising tools.
Leveraging their unique user data.
Yeah, leveraging that high-intent data corpus to offer precision targeting that maybe even Google or Meta might struggle with in certain specific niches.
Interesting. What else?
International expansion, that keeps coming up.
Because Reddit is still very North America-centric, right?
Heavily skewed, yeah. So if they were to make a really aggressive push into high-growth markets, say Asia, maybe Latin America.
That could massively increase their total addressable market almost overnight.
Potentially, yes. And finally, you can't ignore the ongoing background noise. Highly speculative, of course. That Reddit itself might become an acquisition target.
Because of those unique data assets in that engaged community.
Exactly. For a major tech player looking to shore up its own competitive moat, it's always out there as a possibility.
Okay, so we've covered a lot of ground. Fundamentals, technicals, catalysts, risks, speculation. Let's try and synthesize this. What's the bottom line for someone listening?
Right. The final takeaway. Our overall outlook, I think, remains strongly bullish. Maybe an 8 out of 10.
Okay. Why so strong?
The fundamentals are clearly improving. And fast. Revenue growth is high. That shift to profitability looks definitive, not just a blip.
And the technicals back that up.
The technicals support a strong, confirmed uptrend, even with the volatility. And that near-term calendar is just packed with potential value-driving catalysts, especially those Q3 earnings.
So the key message for an investor.
I think Reddit looks attractive right now for potentially 2 types of investor.
Oh.
Short-term traders, perhaps looking to leverage those specific upcoming events like the earnings report. And also longer-term investors who are really making a bet on the scalability of Reddit's unique data moat and platform over several years.
But with a major caveat, right?
Absolutely. You must be prepared for elevated volatility. It's baked into the cake with this stock right now.
So perhaps a concluding thought then. The high-risk, high-reward nature seems unavoidable here.
It really is. And while that reward for successful execution could be substantial, the absolutely critical focus for Reddit has to be maintaining that blistering pace.
The pace of innovation, product execution.
Exactly. Against those incredibly fierce, well-resourced competitors, the moment they seem to pause or stumble, their competitors will be ready to pounce. Constant vigilance, constant innovation, that seems to be the name of the game for Reddit.